Okay. Going through here on the cues, right? We talked about a break in base and the trade that I took. I'll explain why I took that trade. 368p on the 1 minute 9 EMA tap, 9:36 a.m. right off of the open. Now remember, when we get a shove down, looking at our indicators, right, we're under VWAP, and our 1 minute EMAs are bearish, right? The 20 is above the 9, and they have both crossed under VWAP. Also, looking at the 1 hour, you guys, every morning I look at the 1 hour. Let me see. Every morning I look at the 1 hour chart to kind of look at the current, macro trend, what the hourly is doing, right? We were ranging here, and then it breaks up, higher high, higher low, higher high, higher low, higher high. We hadn't gotten a higher high yet, or higher low yet. And off of this open, I was like, hey, we're probably going to come back down and form another a possible higher low, right? A rounding bottom like we got at the middle of the day. So going through here, this is what I was looking at, right? Fitting into that trade, that looking for the next higher low, which would be a pull back, right? A sell off a little bit. And right here, 9:36, I take the puts on the 1 minute EMA. And, a lot of people would have stopped out over the 20 EMA or VWAP here, right? I always leave room. My initial entry is not my full entry. And I always leave room to average down or, possibly see if the trade is still valid, but maybe my entry was a bit eager or something like that. So going through here, why did I hold on to this trade? Why did I hold a little red, but to make big green, right? And moving through, remember we talk about looking at our EMAs, looking at VWAP and everything. We're under VWAP, EMA's bullish. Look at the 5 minute on NQ. This is why it's so important to watch NQ day in, day out, right? Every single morning I'm looking at this, right? 9 is below the 20. We're under VWAP. And very clearly here, we see that the 9 is being respected as resistance, right? It keeps getting shaved down. So even though we get a big push up, let me zoom in a little bit more. We get a big push up here. If you can see in this quick chart, we get a big push up into the 5 minute 9 EMA. There is VWAP here and the 200. And I see, yes, that is scary. Sure, right? But don't get wicked out. That was a weak high of day break, as well as our EMA's not crossing or not looking like they're wanting to cross quite yet. So I hold on to the trade and, look at what happens, right? Holding on through conviction, understanding price action, not flipping back and forth. Sure, I could have stopped out of my short here and then flipped long, FOMOing, right? Getting off tempo and then getting dumped on and being frustrated because of my, being stopped out of my initial put. How do you know how much those contracts were red? I feel like a move like that would have stopped me out. Otherwise, they'd be like red 40-60% because I'm not playing out the money. So remember, this is my initial entry, and the 1 minute it can be very weak at times, right? So we talked about, hey, I want to hold this up near VWAP, near the 20 EMA for this kind of stop loss. So, yes, on the initial entry, it will go red. But, I've talked to a lot of experienced options traders and stuff, and, they'll talk about like, hey, sometimes when you take an entry and your thesis is correct, but maybe your entry is a little bit poor, right? It's better to just, hold on to your original entry and average down with a proper thesis, right? Don't just average down into oblivion, but truly, focus on, QQQ is going to follow what NQ is doing, right? So going through here, I see, hey, rejection, there's VWAP, there's also the 50 EMA, right? EMAs, 9 and 20 EMAs are bearish. I want to hold on to this a little bit longer. It's worth it for my kind of smaller position, especially off of the open, right? For me to hold on to this, to test this a little bit, because this was kind of my feeler ad, leaving room to average down. So we get a great trade off of that. I also ladder, I say this wrong, they should be the 367s because, I kind of fat fingered that number, but 367 Ps to ladder. And that was right at 9:46, so 10 minutes after the initial entry. So right here, 946 is right here, right? 9 EMA tap. And laddering, right? This is how you can make more money on the same move, but using it and trading a different strike, right? So that is to prevent you from messing up your original entry. Why is it? I don't understand this. Why it's buffering. What does this mean? Dropped frames. Oh, is the weather bad? I mean, mine's a 67 and clear. Jupiter, what does dropped frames mean? I don't know why it's doing that. I don't have any. I just have. Maybe we'll close this. Yeah, I don't have very much. Yeah, I mean, I don't know. The Twitch stream is messing up for whatever reason, but yeah, okay. Well, I'll just continue through the stream, right? We're in the Discord anyway. So going through here, right? Laddering, we get a 9 EMA push up. Remember, later entries dictate quicker profit taking. This is also that low of day breakdown and base. We called this out as well earlier in the stream. You can watch the VOD. We can see here selling pressure, selling pressure, selling pressure. These are aggressive sellers, but remember, you can't just hold on to oblivion. I talk about, hey, this is, so if you take a short here, where's your most recent support? Remember, this has not been developed yet. So this being the support, when the support cracks, when you get a pivot break in the desired trend, you need to be locking in profit. Okay, Ion has told us this very early on, right? He's like, hey, when it's very strong pushing on momentum, it's better to lock it in. You're going to get spikes in delta and a very strong push up in your premium. We've learned that, hey, if you don't scale out on the lower low breaks, right? The pivot breaks in a downtrend, what's going to happen? They're going to take it from you very quickly. Okay, we know how quickly and how volatile these, contracts can be, especially trading options if you're trading 0 DTE or anything like that. I also want to talk about a reversal point in the day. Okay, so we kind of had, I was looking at this kind of inverse head and shoulders look. Where is it at? Let me pull up the 5. Okay, so we had this pull back, right, that initial push up, and then we have a head here. So I marked this area, or that, not area, but this support right there. Pushed it through, right? Now, when it pushes up, when it comes back down, you would ideally be looking for that next, shoulder, or, to respect that neckline, right? So it pushes down. When it pushes up here, right, you want to see a break in base. Now, I want to talk about, the levels of confluence. So yes, there is that neckline there, okay? But charting this channel, okay, when this pushes down here, we can see, we can see a channel here, right, ranging up, down, then back up. So I want to mark this high here and the low. So you have this channel here. So remember, I need at least 2 levels of confluence in order for myself, right, to take on a trade with confidence, right, for a strong confirmation. So you have this channel here. It breaks up and bases, uses that previous resistance as support. Okay, you have a 5-minute 9 EMA crossing above the 20, which adds very much strength here. Okay, you also have that neckline. So there's 3 levels of confirmation for you to take a trade. Now, I know that it can be scary for a lot of people, buying dips, and, they're like, oh, this looks super heavy, it's going to dump. you are putting yourself at much less risk when you are taking a dip entry. Okay, so when you are taking a dip entry, you're not buying juiced up contracts, right? Things that have already been, spiked up due to the price action, right? Think about this trader who FOMOs into that big green candle and then it pushes back down on them, right? They're sitting there very red. And maybe they hold through it, but even when you get a push up like this, it's still very nice, right? But you're not getting from the base down here and accentuating that whole kind of move, right? You're waiting to get back even around this range and then pushing up. So you're missing already half of the move there. Now, another thing is, averaging down compared to, stopping out. Some traders can understand this gut cut feeling of, hey, a novice trader, typically when they're about to cut a trade, they have a gut feeling, right? And your stop out is typically a much stronger buy, right, than your initial entry. So what I mean by that is, this being a very weak entry, right? But if you take this entry, where are you going to stop out? If I clear the chart out entirely, if you take this entry right here, where are you going to stop out? Okay, there's this support or this resistance here, or that, previous resistance turning support. And, you also get the first candle pushing down. So you can mark this support level here, right? Most traders are going to stop out right under this support level, right? And a lot of traders did. Okay. Now that is that gut cut feeling. This is when the fear sets in, right? When you buy other traders' fear, you capitalize upon that, right? So, it's just like buying puts, right? You're buying into the trader's fear of it selling off, this or that. That's why puts move much quicker than, a long trade does, due to the fact that fear is involved in that trade. So, what do I make of the big sell-off after hours? This all happened because of Facebook. I mean, overall, general weakness, but, Facebook, $10.2 billion loss because of their VR, whatever, terrible earnings, kind of conference call and everything like that. So, they lost 100 and, what is that, 244 from 324, like, almost about 100 there, or no, over 100, $120, 120 points per share, right? Which is awful. For those of you who maybe played the earnings and traded puts, congrats to you. If you traded calls, you knew what you're getting into going into that. You were risking what was possibly going to fail. Now, continuing forward here on QQQ, right? The trend is not looking its best, right? We were looking at what? Higher highs, higher lows, higher highs, higher lows. Then we got a pop up and got that lower high right before, we didn't know it was going to be a lower high at first, but a lower high right before close. And then that big kind of, fearful sell-off due to the Facebook kind of earnings, right? And Amazon, right? So going through here, there's a very crucial support to be held. I feel like that there is a lot of weakness at this point in time, especially with the earnings that have been put out. And going here on the 4-hour, kind of zooming out here, right? Sure, you could look at this as a possible cup and handle, this or that. I would always trade the chart that's in front of me. That's what really has saved me. And going through yesterday, right, the reason why I went through so much trouble off of the open and got back green, thankfully, right before lunch, was due to the fact that I was fighting the trend. I wanted to take calls here, and I did take calls here on this big push down, right, because it was a possible area for it to bounce or break in base and continue to the downside. But looking at the trend, I wanted to maintain a higher low and continue forward, right? I was looking for a dip and then rip off of the open, but that was due to the fact of my being overly biased towards one direction compared to another, right? So I should always be fluid when it comes to the market, and that's exactly what I did today. I saw, when it did sell off here on the 1 minute, right? This is on the 5. When it did sell off here, I was like, I can't short that. I can't, I can't short on a downtick. I talk to people and tell people that every single day. Yeah, and even though we do it sometimes, right? But I waited for the push up, got in a little early on the push up, saved myself by leaving room to average down as well as the EMA, right? But trading, alongside the current trend that's at hand, being under VWAP, 9 and 20 EMAs being bearish, right? Big push down under the 5-minute 200 EMA. So, one second, guys. Yeah. And then going through here, right? How do you hold on to a trade like this? I talked about there is a what is it? Oh, the video in the Google Drive file, most recent one that is in there. If you sort them from most recent, and it is the how to simplify your trading video, right? I was telling you guys earlier that you guys should check that video out and watch that. If you are having trouble, holding on to winners or finding entries, or if you're getting stuck and getting chopped up on the 1 minute, please watch that video. It's going to allow yourself to cut out a lot of the noise presented to you from the 1 minute or the smaller time frame chart. I enjoy the 3 minute, but the 5 and the 10 minute entry ads on the EMAs are much stronger, but they're less common. So you're going to have to be a bit more patient when it comes to your trading, which I think is great. A lot of newer traders burn all out of their buying power within the first 30 minutes or so, and due to that, they fail to miss out, or they fail to capitalize on the rest of the moves presented to us throughout the day. So going through here, getting those multiple levels of confluence, how do you hold on to these trades, right? Very simply here, just on the 5 minute, okay? I will go on the 5 and then I'll go on the 10. We know how the EMAs work. The 9 EMA is a decent dip entry. You want to see it kind of used as support, and the 20 EMA being very crucial for that certain time frame. Now, always look at which time frame is being best respected, whether it be the 5 minute or the 10 minute. Please make sure that you are looking for the best kind of time frame that those EMAs are respecting, or the price action is respecting those EMAs. So I can see on the 5, right, alongside our pivots, lower high, lower high, lower high, lower high, right? But right here, 20 EMA rejection, 20 EMA rejection, 9 EMA rejection, 20 EMA, 9 EMA rejection, another one here, here, and here, right? Holding on to the trade. I held on to some of these puts until about 11:30, right? Very nice trade throughout the day. And all I did the rest of the day, once I saw this double bottom, what did we do? We took the 370 calls again for the swing, right? I think I put it in the Swing Ideas channel. Let me find it. Where are you at? What the hell? Oh, there it is. Okay, so right here, we were already trading them, and I scaled those out for 100% this morning, but I took these February 4th QQQ 370 calls here at 1150, right? So I was trading those puts all day, right? Holding on all day. Remember, if you're in a trade, a lot of traders, if you take a short here, they get out right here when it pushes against them. I don't do that. I hold on as long as the EMAs are closing beneath with a sense of strength, right? So that's how you hold on to your trades. Don't, if you take a short here and you're stopping out on the next lower high, you're just giving your entry to someone else, right? Someone else is going to make money on your trade. And sometimes it does work out in your favor, right? It does rip up, blah, 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 right? But at that point, your entry is probably too late to begin with. But we took those February 4th, the Friday expiries at 370, or the 370 calls at 1150 here. They were about $1.75, $1.80, so 1150. Look at where 1150 is. I'll mark it on the chart here, 1150 candle, right? Why did I take those again? Right, after selling them this morning, why would I take those calls again? Right, we've been in a bearish trend all day. I've traded puts all day. What told me that I should flip sentiment? Right, And if anyone in chat could, I know that some of you guys are already in the stream this morning, right? But why did I flip sentiment there? What told me or gave it away that I should, flip from puts to calls? Okay, lots of lower wicks on 30-minute, double bottom, inverse head and shoulders, breakdown, sending EMAs, right? You guys see what everyone is saying, right? There are multiple levels of confirmation. You guys already know that you see what is actually working out. So, I love trading on the EMAs. We can see here that, and you guys are all right? Double bottom, right? A large bottoming wicks on a larger time frame, demand zone being right there, so you're not getting a stronger lower low. You're seeing a lot of buying pressure going on, right? But noting the EMAs, okay? Nothing closing very strongly except for early off in the morning where there was, a spike in volatility. Rejection, nothing closing strongly here. Nothing closing strongly. No candles closing. When we get this first candle closing into this level right there, that's where I take the calls, right? As well as we have a doji, right? Look at the doji bar method. You draw the high, the low, you draw the body out. You get the first candle closing into that upper wick, okay? So that is a very strong price action. I added that with the strength of all of the things that you guys are talking about, tweezer bottoms, EMA cross, didn't make a lower low, double bottom, all of these different things, they add to confluence. You guys all spot that, but the problem is that you may not spot it live because that trader who has been trading puts all day has a tough time switching to calls or trading or switching the sentiment, right? I've talked to you guys about focusing on, myself with my weaknesses being, being a little late to reversals or, trading through the chop, the consolidation, stuff like that. So what have I done, right? We focused very heavily on those points in time in the chart during our review and also when it is live. So I have went over the 5-minute chart. Remember, look at multiple time frames. You can't just stick on the 3-minute, stick on the 5, stick on the 10, right? Look at all of them throughout the day. So 10-minute EMAs, right? Nothing really closing strongly. Remember, this was different. Hey, DD Bearded Beast, thanks for the sub. Right? Look at how strongly this rejects. This is how you simplify your trading. Okay, it's very easy to switch from trading on the 1 minute to the 5 or the 10 because the entries are going. When we are trending, they will be presented to you, but very quickly. Okay, and you have to be looking for that, right? On a big push down, when it is pushing back up, you want to watch for the reaction of these EMAs. So very strong rejection, strong rejection, strong rejection here, right? When that first candle closes, this is that candle, right? At 11:45, 11:50, right here where we take that entry. First candle closes into that, right? You also had that doji kind of look to it. It closes into that upper wick. Very strong move there, right? I take these from $1.75. We'll go back to the Swing Ideas channel. And remember, when I take swings, this or that, I don't have like a, it's not like, oh, I have to hold this for X amount of time. If I'm making profit on the swing and it's, look, 175 to 248, I would be crazy to not take $75 a contract. And that's not saying to take all of it off. And even if you're new, if you only took one contract, you probably should, scale out like you normally would. Don't just hold on for hope, and everything like that, right? Take money from the market. Someone messaged me this morning about the swing that we originally took a few days ago, right? I took the same 370 calls here, right? I posted that on Twitter, right? We took them right here on the higher high break. There's 370 calls with the same February 4th expiry. So the how to simplify your trading video is in the Google Drive in the Discord. right? I'm not sure if you remember in there or not. But this is where we take the 370 calls, right? I hold through, and then on the very next day, right, I'm still holding, swinging these because these are about break even, hitting a little bit higher towards the end of the day. Very nice spike up. Right off the open, I'm looking to market sell, scale out some, pop up, scale out more, leaving orders and everything like that. We got a nice scale out, completely out for over 100% on those 370 calls for swing. And on the dip back down, okay, remember, this is where I took them originally. So I'll just draw a box out for a general area where I took them. This is much higher here, but on the options contract, my original entry was about $1.40. Due to theta and everything, when it pulled back down, it was back near $1.70 to $1.80 right here in this area. So I wanted to take it again, especially with the cushion that I had with the original entry, with the original trade, right? They're practically free contracts because I'm compounding those gains. And being able to flip sentiment, noting the EMAs, using multiple levels of confluence, larger time frame, bottoming wicks. I'm sure Jupiter is talking about. Look at the 30-minute tweezer bottoms. If you just don't know how to read that or what that means, then take this weekend to study and don't put on any more trades. So continuing to move through here. My kind of general outlook for this week, right? Going into tomorrow, I see that the hourly, we've been under. Normally, the 200 EMA acts as a very strong resistance, but when it is in a bullish trend, it acts as support. It doesn't hug it as nicely. That's why the 9 and the 20 helps me out in that kind of range. But going through here, right, our EMAs crossed right at the end of the day. Okay, now the 20 is above the 9. I would expect to see some tests of these 9 and 20 EMAs. I also talked about this earlier, and it was, going over how to trade EMAs, right? Bringing patience. I've been teaching and pounding the table on patience for all of the members in the group, right? But when I trade these 9 EMAs, and I know I have videos on EMAs, but the more and more that we trade them, there's more tricks to it, more kind of key things to be looking out for. Okay. When I take a trade like this on an EMA, let's say you don't even have an entry, but someone else has been making money on the puts, right? Let's say someone takes an entry there. Now, when it pushes through, why would you FOMO with bad risk? Where's your stop out here, right? If you're going to say your stop out's way up here, right? At the high of that candle, it's pretty bad, right? You're also very near the long risk, right? This is long stop loss, right? Those who are the bulls, right? Those who are playing calls, right? That's the long stop loss. So you don't want to take that entry. I see that, hey, we are extended from the 9 EMA on the 5-minute. I know for a fact that price will come back and touch that EMA at some point in the time, right? There's never been a time where it doesn't touch the EMA at all, right? It will always come back to it at some point in time. That is a fact, okay? There's no arguing that. So why would you take an entry where it's extended off the EMA, right? Why would you take this entry extended off the EMA? The only reason why is because of weak emotions, right? You're FOMOing into things. I know, and also this, right? If you're in a trade, people were asking me this, they ask me this every day, hey, the EMAs, they don't tell me when to scale out. When should I be scaling out? You have 2 things to look for when you are scaling out. Okay, so if this is the support, this is the current support, right? And you have this as well, right? A space, right? You are extended off of the EMA. When you see an extension off of the EMA, right, you're far from your entry because you added on the 9 or the 20 or VWAP or whatever. When it's very far extended, right, that's when you want to get a scale. When you start to see this gap, you see this space in between the 9 EMA and these, this candlestick here, you should start to scale out. Look at what happens. I know, hey, we're super extended. Look at that space there, super extended from the EMAs. It's going to come back, and I don't want to sell when it comes back. I want to sell when it's far away. Okay, so that's the first point. So you take a short here, right? You have a support level. When you take this entry, your goal always is to take or to scale out on the pivot break. So when I say pivots, I'm talking about lower highs, lower highs, lower highs, right? Lower lows, lower lows, lower lows, lower lows, right? In a downtrend. In an uptrend, higher low, higher low, higher low, higher low. Where you want to scale, those are your entries. Where you want to scale out, oh, higher high pivot break, lock profit in. Oh, higher high pivot break right here, lock profit in. Otherwise, if you don't lock profit in here on the breakout, they're gonna take it. They're gonna take your profit for you. They're gonna take it from you actually. So going through here, right? If you take an entry here and a price action breaks your pivot, right? The lower low, that's what you were aiming for or wanting, then you scale out. Okay, you have to scale out. I mean, like, that is how you trade, guys. That's how you lock in profit. That's how you build your account. Everyone wants to get rich. It's not a quick process, guys, right? It's a very time consuming, very I would say I don't know the correct word. You aggressively participating in building your account, right? You can't just passively build it. Everyone wants to use a small amount of capital and turn it into a large amount of capital, right? In a quick amount of time with not a lot of effort, and that's just not how trading works. Someone is asking, okay, this is the third or fourth attempt tonight. Either way, I'm going to watch this video. It'll be worth it. Yeah, I don't know what's up with Twitch. I don't know why it's doing this. I restarted and everything, so I do apologize. But going through tomorrow, right, that's why as day traders, right, sure, the remainder of my swing, right, so we take this swing, guys, and this is the thing that blows my mind. I don't get it, because people, yes, they hold swings, but, if you're in a swing, right, I have a different kind of, I guess, understanding or kind of definition of a swing, because I was trading small caps and I don't want to hold for an immense amount of time. Maybe if the market is choosing a correct direction, or it's a much more simple price action that we're trading, then I would like to take on some swings. But because of this uncertainty in the market, there's no true direction. We're just kind of going up and down, and with no sense of confidence in either direction, right? The shorts aren't overly confident and the longs aren't overly confident. We can see that battle day in, day out. My swings are like, I've talked with Scalper Ryan before. They're like swing scalps. I could hold them for a few hours. I could hold them for, a couple days, right? If the risk, or if the profit is too good not to take away from the market, especially with the strength at hand, then I'm going to take profit. So where do we take that entry? Right here at 11:45, 11:50, around this time frame. That arrow, right? 370 call entry. I'll take that. Okay, so we took the entry right there. Remember, my pivots, guys. This was a resistance level. Okay, this happened before my entry, and we had not pushed up to it yet. Once I break up and make a high, oh, hold on. Whatever. Once I break up and make a higher high, I'm locking in profit. Okay, oh, that previous resistance is turning support. I'm going to keep holding. There's no reason, right? But there is this next resistance. On the next resistance, you lock in profit. So I'm going to mark these with red arrows. You lock in. All right, these red arrows are going to dictate as scaling out. Okay, that doesn't show up very well. Great. Okay, and again here, right? Higher high, pivot break. I'm going to lock in profit. Does it not matter if you get the absolute top or bottom of a trade? Remember, you only need the necessities. You only need the meat and potatoes, okay? So, I look at trading, especially when I'm looking to compound gains and take money from the market. I'm an aggressive seller. I will scale out consistently. Yes, my position size is much different if you're trading 1 or 2 contracts. I know it's difficult, but you should be trading those 1 or 2 contracts how you would be trading 10, 20, 30 contracts, right? So going through here, think of it in this kind of sense, right? Be like a thief in the night, right? When we're trading, we're stealing money from the market, right? Be like a thief in the night. When a thief in the night goes into your house and they rob you, they're not taking everything in your house. They can't, right? We have to walk amongst these larger participants in the market, trade around them. When someone robs you, they're going for the main things in the house, right? The meat of the move, the meat and potatoes, right? They're going for what they can grab very quickly and consistently and get out, okay? And that's how I trade. Oh, they're gonna give me a higher high pivot break, and I'm in a bullish kind of perspective. I'm gonna take that. Oh, they give me another pivot break. Oh, I'm gonna take that, right? So scale it out, excuse me. That protects you, sure, I'm holding a very, very small court. I mean, I was locking it in. I kept saying, hey, locking it in. You guys will see on the trading floor me talking about scaling out, especially in Stacks chat, multiple times throughout the day. Graper, thanks for the sub. So, stop looking to hold on to your trades forever. Remember, I know a lot of traders are trading on the smaller time frame. Your goal as a day trader is to get the legs, right? Just to get pieces of the puzzle and take it home, okay? So like that move, right? Oh, that's a move, right? Oh, from the short perspective, that's a little move. You don't have to trade every single one of these, but the problem is that traders they'll do this. They want to take one trade and they want to hold it all day. What if you took one trade, you held it all day, you're back at you're back at break even. Now, some days it does work out, but that's the anomaly, okay? That doesn't always work out. Theta will eat your contracts. You won't have a correct kind of thesis or proper understanding of what the chart is actually doing. You're just randomly throwing money somewhere, and it's not going to help you in the long run as a day trader or a trader in general. So be aggressive, guys, right? Don't look at selling or scaling out as taking profit. Look at it as offloading risk. Everyone is so fearful of risk, right? The risk of profit potential. That's why everyone has anxiety when it comes to the market, or maybe they have PTSD from taking losses before, right? Taking a loss threatens your profit potential. So how do you reduce that, right? You're scaling out aggressively. I don't care if you got all out for 30 or 40% and the trade ripped 100, 150%. People will sit there and complain, but that does you no good. It only, creates self-loathing and hatred towards yourself when you are taking trade. Why can't you say, hey, I just made 30% on this trade and I didn't lose money. I took a good trade. Why is that not good enough for you guys, right? As humans, we are wanting beings. We always want more, want, right? Once we begin to learn to accept and be grateful for things in life, right? It's a totally different experience. So it should be the same with our trading. Let's see here. I think... I'm going to touch over just a few more things and then I'm going to wrap it up here. Paper Route Roddy says, so let's say I take profit at VWAP at that area where you marked first. Would you be all out if it were coming to that next entry where resistance turns support without knowing the information given after in mind? So I think you're talking about, let's say you take profit at VWAP. Okay. So I think you're talking about here. And then you said, coming to that next entry where resistance turns support, right? So this right here. Yep. Would I be all out coming to that next entry? So that's exactly what I was talking about. This person who takes a short here and they're green, and then when it pulls back, right, you stop out. How many of you guys stop out on an EMA tab or an EMA pullback just to see it push further in your direction? Okay. What that is, remember, it's the threat to your profit potential. Okay, so you're like, oh, I'm super profitable down here. Oh shit, now I'm not super profitable. I want to get out, right? It's not always just going to go up. We understand the ebb and flow of the market. Hey, I take an entry here. Oh, I'm super profitable. Oh my gosh, no, I'm not anymore. I want to get out, right? Not valuing your entry. This is so much work. It takes an immense amount of buying power to reverse the market. Okay, so value your entry. If you get as close to that as you possibly can, then value your entry, right? Oh, this isn't going to stop me out. I'm going to hold on to the trade until it stops me out break even, or two, it gives me an opportunity to lock in more profit, right? So also add to confluence, right? If I had that entry beforehand, it was out of demand, double bottom. Yeah, that previous resistance and support, but from a different perspective, left shoulder, head, right shoulder forms, right? 9 and 20 EMA. Previous resistance turning support, right? Adding strength to that confluence. That's why we took that entry there. And I know that it seems kind of scary, but that's right where it crosses, and it was a very clean trade, right? So Mr. Harris says, experience question. You're sitting on Facebook 270p. Would you price it for a market sell $30, for example, due to the expected AM volatility, or let the bell go and watch? Okay, so from my experience, I don't want to tell you when to sell or what to sell, or why. From my experience, it's better to set a limit, right? Think of it like a halt. Okay, if you traded small caps before, I'm sure you have, right? Off of a halt, when something halts up, those traders who set limit sells above the halt level, expecting it to spike up, whatever, they are comfortable taking profit, right? They're aggressively selling. So look at it in that same kind of manner to protect yourself. Don't sit there and be like, oh my God, I didn't get filled. I want to market sell and have the worst fill and IV crush, blah, 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 right? Set something that is going to, possibly get you filled with consistency. I don't know how much you're holding or this or that, right? But, always protect yourself, and, especially in regards to the unknown, right? The uncertainty that is going to happen after 9:30 kind of dings off. Oh, for sure. Yeah. 32,000%. Right. So, going into tomorrow, guys, we had a decent poll today. I'm not, upset about 100 to 7, 103 to 79, right? But I want to tighten that up, right? Why are, I will take a few kind of comments just based off this question, right? But why are some of those traders who are red who voted today, right? What was your Achilles heel, right? What, kind of accentuated or confirmed your red day? Right? Was it a mistake that was very unnecessary, and maybe a trade where as soon as you got into the trade, you knew it was bad? I really want to understand it more so that I can help you more, right? Because, off the morning, if you watch the VOD, right? I had one losing trade, I think. I think one just off the open. And we killed the puts, right? And then we killed the call. And I took more calls up here, right? Scalping them up along the way. So I really want to be able to understand from from those newer traders' experiences, or those traders who have been red, as to why they possibly experienced or are experiencing red days, right? I want to tighten that number up. And I know a lot of you guys are learning. Don't feel stressed out if you are red, this or that, right? That it is a part of the market. That is something that you will go through. But don't accept it. Don't accept being red. You can be okay with being red, but accepting being red without having the proper kind of mindset to overcome that eventually, that's what really hurts you. Can you break down that price action at 14:25 QQQ 5 p.m. today? I think I found a pattern. So 2:25. I'm assuming you're on the East Coast, right? Okay. So why this worked out, right? So remember, I am a price action trader at the end of the day, regardless of the EMAs, right? Let me take them off. Regardless of the EMAs, guys, it's super simple, right? I tell you guys to do this all the time, right? Look at this. Low, higher low, higher low. Okay, EMAs are not going to do you anything here. I can already tell. This, even if you don't mark the higher low, maybe you mark this one. Maybe you mark this level as your most recent higher low, right? Would that really have stopped you out? Should that have stopped you out? Now dig a little deeper. Remember, I'm a price action trader. Okay, what is this small body candle, large bottoming wick here prior to a move up or down mean? What does that mean to me? Right, it's a zone. Extend that out, draw a zone, draw a box, extend it. Look at that. Do you see how clean that is? So I really want you guys to stop relying so much on the EMAs. The EMAs only work for you when we are trending or have a sense of a trend. This, what I call that trending, not at all, right? We're moving sideways. This is consolidation. So when you are consolidating, what is important, right? Your horizontal levels. This is the most recent supply. Yes, there obviously is supply up here, right? But this means nothing to me until we break through the intermediate supply. Okay? So supply, demand, right? Sideways. Focus on your horizontal levels, whether it be support or resistance or supply and demand. So, as well as Dark Mike says, what do you think about the after hour dump going into tomorrow? Any levels or opportunities to look out for such a move? I was looking at on Twitter and, same thing. I had the same kind of feeling. Adam Sliver was talking about no watch list tonight because most of the levels are just going to be negated. I think it's better to wait for some pre-market kind of action, but also there's a ton of uncertainty. Market makers love uncertainty because they can manipulate and kind of herd retail into what they want them to do, right? If trading is 90% psychology, right, then market makers are like, Munchausen's by proxy to us, right? We are like little lab rats to them that they just continuously like to manipulate and, toy with. So going through, why are you guys saying Facebook ER? Oh yeah, it did. Facebook ER. Yep. So, going through here, right, I'm just going to wait till pre-market and I'm going to trade the chart in front of me. I don't want to have a level, oh, this level should hold as support or this level should hold as resistance, right? That's all blown out the window from my perspective, right? And I see a lot of dark pull orders here on the after hour move. It's interesting because we had a lot of dark pulls orders down here. Oh, hold on. A lot of dark pull orders here in pre-market. And remember that thesis of, hey, normally these get filled. Now they have already gotten filled, but price may come back down to these levels. And that's exactly what it did, which was a very clean short, confirmation adding to the confluence. And once it did get filled, right, what happens? We reverse to the upside. Kai says, how do you balance looking at the macro trend but not being biased going to the day? So this is exactly what I was talking about. So Kai, right, we can see here that we're in a bullish trend, higher highs, higher lows. Okay, the macro trend may be bullish, higher highs, higher lows, right? But within the macro trend, I know that there will be bearish sentiments, right? There will be bearish trends in the micro. So we get a big push up. Even though this is higher highs, higher lows, this is a bearish micro trend, right? I'm going to always trade the chart in front of me. I don't care, if it's a macro trend, this or that. If you're going to get a higher low, you have to sell off to get that higher low, right? So we get a higher high, and this is a higher low, right? There's the most recent pivot. There's no other pivot before that. This is pushing down. Nothing else is pushing down besides this. So this is the most recent higher low. We push down and maintain that higher low, but we're able to make money on the downside in the micro trend, even though the macro trend is bullish. I'm gonna wrap it up here. I hope that this helps you guys kind of prepare yourself going into tomorrow. guys, please, I really want to tighten up those numbers. We had a great kind of walkthrough for the trades today. But remember, that just goes to show you the call outs are not everything. It's always about your understanding of the market, and of yourself, of your emotions. So please, guys, be patient. Post or not post, but watch that video. I think Gonzo posted it. It is the how to simplify your trading. I'll just pull it up in the Google Drive, right? 1 second. Here's the Google Drive, right? It's the most recent one from 1:30, right? Simplify your trading. Watch that one if you can, right? I mean, all of these are very helpful, TA refresh or whatever, but this one is going to help you minimize your trading on the smaller time frame and really looking at the 5 or the 10 going in the day. So, yeah, I know, of course, Twitch. I see this little box here on OBS, right? This little box was red, and now it turned green. So, I don't know what that means, but of course, Twitch is working, and we're about to wrap it up. So, remember, guys, please, tomorrow, I want you all to just be as patient as you possibly can. Just avoid trading the open. Remember, I've traded the open for years now, so my experience in trading the open is much different from a lot of your other experience. Even a year experience trading something is, think about how many times I go in day out trading the open compared to someone who's never traded it before within 1 year, right? 200 plus times. Okay, compared to that newer trader who's like, oh, I want to follow this trade off the open, right? And then they get steamrolled. So, prepare yourself for tomorrow. Keep a clean state of mind, a fresh, clean slate going into tomorrow. That's why I don't swing very much, right? I mean, if you didn't take over $100 for a contract on that swing that we called earlier, right, that's crazy. I don't know what to tell you. Higher high pivot breaks are really all you need when you're scaling out and to be okay with your trade, right? You're no longer sitting there sweating, holding into a trade that you're really not comfortable holding because you're offloading risk, day in, day out on the pivot breaks. So tomorrow morning, right, we'll start the live pre-market prep, 8:30 in the morning. I also will, try to push trades on the 5-minute or the 10-minute EMAs. We will cover over the indexes. So once again, thank you to everyone who tuned in. Sorry about the technical difficulties. I hope that this did help you for your review and to prepare you into the market, not only going into tomorrow, but in all future sessions. So I will see everyone in the morning. Please get some rest. Please hydrate, right? Drink your water. Let's have a good day tomorrow, guys, right? If you're red today, it's a new day tomorrow. We all have the same 24 hours in a day. And it's really dependent upon how you approach your experiences within that 24 hours and your mindset, which is really going to dictate whether or not or how your kind of day is going to go. So use your time wisely, right? So I'll see everyone in the morning. I hope this helps once again. And you guys have a good night. Thank you.